All right. Hey there. What's going on, everybody? Chris Franks with Texas West Capital. Got Beards and Bitcoin today. It's already our 13th episode, if you guys can believe that. I appreciate you guys continuing to come back with us. Tillman is going to be out one more week. So those of you that believe he's the sexiest man up here, I know he believes that. He'll be back next week with us. Just had some, personal things to take care of. But anyway, going on to that, I've got Andrew. I'm going to pull him up here in a minute. And I'm going to do something here at the beginning that I don't normally do. We usually just talk about everything else other than price. But we've had a good push up just here recently. So let's go ahead and pull this chart up here real quick. Where is it? What's going on there, Andrew? I see you, man.
Yo.
Real quick here. So we've had about almost a $2,000 rally, as you can see here, with Bitcoin coming off this morning. And so I think I put out a tweet. I think I said the daily pivot up here at 59,650 area. It's actually the hourly pivot. We are right here with the daily pivot. So right now it's looking positive. So if we can get above, again, that hourly pivot up here at around 59,650, depending on what exchange you're looking at, I believe that's going to send us up here above this 65,000 swing high, which just means, at the end of the day, we'll continue up here and likely start putting in a higher high, right? So remember, we're bearish market structure off the top here. We got a high, we got a low, lower high, lower low, lower high, lower low, lower high, lower low here. Breaking out above this last lower high at $70,079.99 on this chart will indicate that structure is broken and we're heading up. So just kind of wanted to show you that while I mentioned one other thing. And that other thing is that when we were going sideways back in 2023, we went sideways for about 6 or 7 months, I mentioned that the sentiment that we were hearing, all that really bearish sentiment, really significant out there, saying that we had to get down below 15,000, 12,000, whatever, most likely meant we were at a bottom. So the range was accumulation versus a distribution, which everybody's trying to say it was. And I'm going to remind you of that right now. Bearish sentiment is really, really high right now, not just in Bitcoin, but across all markets. And that's not the way it works, guys. Markets tend to top on exuberance and just being overly excited. They tend to bottom when everybody's given up, when everybody thinks it has to continue further, when everybody has every reason in the world why it can't possibly rally. And that's a lot of what we're hearing right now. Again, not just with Bitcoin, but with the other markets. So I continue to believe that we've still got further upside. Historically, September is a down month for Bitcoin. So, we've been in 14 years, I guess. We've had, I think, 4 or 5 Septembers where it's actually been bullish, or 4 of them, I think. Anyway, this has the potential to be one where it could actually be bullish. But here's the thing, even if it was bearish, that doesn't mean we have to print a new low below 49,000.
Nobody should even consider selling any Bitcoin until you get a research note from BlackRock or JP Morgan or somebody that is involved with the current spot Bitcoin ETFs that you should sell, because they're not going to put that out. They're still pounding the table that their customers and institutional level customers are buying into, or into their product, adding capital, adding assets to that product. And, again, I find bearish sentiment borderline hilarious at 58 and change. And here's why. 1 year ago, we were at 25, right? So we're up 125, 130% on a year over year basis. You go back 18 months and it's probably closer to 200%. What are we talking about here? So, Bitcoin has a way of making crypto Twitter prognosticators look stupid. And oftentimes those that they make look stupid are the bearish ones. And They make every bearish stock look stupid on a long enough timeline.
Yeah.
Period of story, right? So you can go back to, all right, if you're a bearish guy and it's 2022 and you're calling for, another pullback to 8,000, or you're sitting at 12,000, well, where are we at now? 2 years later, we aren't anywhere near those levels.
Yep.
And yeah, I'm more than comfortable to say that we're not going to see 8 to 12,000 K Bitcoin ever again. Like it's not going to happen. Only way that happens is if there's some systemic risk associated with the settlement of Bitcoin ETF shares, and there's a little window each day where there's the exchange of shares and the associated buying of Bitcoin to satisfy that. But that's such a potential anomaly, a potential strange, almost black swan type event. That's the only way we find ourselves back to 5 digits instead of 4. So, the chance that a pullback to 56 or 54 or 48 isn't just another additional buying opportunity, midterm, even short term. I mean, I'll say that until, again, it's very, very clear that these institutions that have just entered the fray, by the way. So January, the flip, the switch gets flipped for Bitcoin ETFs on January 11th. That's just 8 months ago, man. That's literally just 8 months ago.
It was the other day.
So, and these institutions don't think, their timetables are much different than your average Twitter poster, right? The Twitter poster has to have something to say every day if they've got a decent sized account, right? I mean, that's the cycle that you fall into. But in reality, these institutions and the folks that have millions and millions and billions of dollars long at these firms, the shortest version that they look at is quarterly, right? And most of them are looking at annual returns. So that's the kind of conversations that are being had, and that's what will continue to push Bitcoin higher in the short and medium term, is that you have the biggest organizations pushing the tape, right? They're going to keep pushing the tape and pumping their own version of bags at this point. Again, we all see Bitcoin as this asset that's been around for a decade. On Wall Street, it's effectively been around for 8 months. 8 months, that's it. Go take a look at the price of gold at the time gold ETFs were approved and what happened to the price of gold over the following 5 years. I don't know if you can pull that up, Chris, but it is a eye-opening moment for people. And there's no meaningful argument against Bitcoin following that same type of arc that was associated with gold ETF approvals and the price of gold moving significantly higher, and Bitcoin ETFs being approved and the price of Bitcoin moving meaningfully higher. Not only that, but the narratives associated with owning Bitcoin outside of ETFs, self-custody, whatever it happens to be, are much stronger than the narratives associated with gold. And so, we're talking about, an arc that sees Bitcoin 2 to 5x higher than it is now, in a 24 to 72 month period. And if that's not your, buy and hold period and scenario, you probably shouldn't have, a strongly held position on what Bitcoin's going to do, right? Okay. Yeah. So there it is, right?
Yeah. So it was right there. What was it? Right around 2004, wasn't it?
Yeah, about 2004. Yeah. And gold was sitting at what? What's the price there?
It's right around $430, something around there. $400.
Yeah. So, you go from 400 to what is it, 2,200, 2,400 a day, whatever the number is?
Just about 2,500, yeah.
Yeah. So what is that? At minimum, that's a 6x, right?
Yeah.
So let's assume that we're going to be super conservative and we're going to assume two things: that the price of Bitcoin will probably move faster than the price of gold because 2004 is dramatically different than 2024 in terms of the way that markets move. And then two, okay, let's not assume a 6x over a 3-year period. Let's just assume a 3x. Well, if you're at 3x, that's 150 plus Bitcoin. I don't know, over a 3-year period, if you're getting 100% returns on an annualized basis over 3 years, most people would find that extraordinarily compelling. And oh, by the way, people chase proverbial performance. So if you have 100% year and then another 100% year and then another 100% year, the assets that are going to come barreling into that particular category are going to be mind blowing, right? They just are. And so, the opportunity here, while people are quote unquote bearish, and I, Chris and I talked before the stream started, and he's like, people are so bearish, and I'm like, who are these people that we're talking about, right? Like, who are these people? And so, I would instruct people to zoom out, to take inventory of other moments in markets where new product categories came to the fore, and there were dramatic price increases because of the availability of the asset. Again, think about gold. The only way that you could really hold gold in 2004 was some version of futures slash you held physical gold, right? That's where we were with Bitcoin. You either held it in cold storage or on exchange, or you were able to trade futures with the CME, right? Well, now we have the switch. We have Bitcoin ETFs where you can have access to the asset in a different way than it was done before. And again, a 6x return in that time period. So are you willing, as an investor, to say, I think I'm going to bet on the 6x? That's what I'm going to do. And you know what? I'll hold it for the next 3 to 5 years. And my expectation is we're probably going to get close to that. No, by the way, it also provides me with uncorrelated returns type of capabilities. It also, allows me to, to have the type of asset that when, yesterday, the NASDAQ got absolutely crushed.
Yeah.
Right? Yeah. Well, sure, Bitcoin dipped, but it didn't dip in the way that it used to when something like that happened. Not even close. We would have a 8K, red candle on days like that before. When
the price was a lot lower. Yeah.
Yeah, and right, and the price was a lot lower. So, in the aggregate, as a percentage, what did we move down? 2K or something. We've got that back already. I've seen a couple of in the last 24 hours. I've seen, I think, 2, maybe 3 different times where a couple of folks in the Bitcoin space has been like, well, we're at 58K again. And they open up a spaces and say 58K gang, and well, it was 58K gang, then it was 56. Well, now it's 58K gang again. And so it's the fact that it can be an uncorrelated asset and it can be a hedge against inflation, and you can hold it in self-custody and be a protected asset, again, associated with geopolitical or black swan events, but also you have the opportunity for it to be tied to markets and have the ability to, again, go parabolic, with everybody believes that it does over a period of time. I mean, those are all really, really good reasons to own Bitcoin. And so just keep adding to your holdings. Just keep, as often as you can, buy it. And the people that are going to be in the best positions are the people that have committed to, buying it in a scheduled way, as often as they can, whether it's daily, whether it's, twice a day, whether it's twice a month, whatever it happens to be. Those are the folks that are gonna come out the best. Dumping, you sell an asset and you're going to dump 100K in right at 58K. Well, emotionally, you're going to be tied to that 58K
number. Yeah.
Right. Yeah. So split it up, split it up into 10 different versions of buying 10K of it, or 20 different versions of buying 50K. And so you're DCAing the totality of that capital over a period of time. And so you're not tied to a particular number, and your brain isn't messed with when it moves around that number. That's probably the biggest issue with most Bitcoiners, is that they've made a commitment to Bitcoin, but they've made a $10,000 commitment or a $25,000 or just whatever it happens to be. They're tied to that number. I've mentioned a time or two having an ex-girlfriend that bought some Bitcoin when I told her to, and she's like, she got sour on it because she bought it at 61 or 42 or whatever it happened to be. And a couple times when it would be under that number, she'd like, I'm sick. I'm not doing this anymore. This is trash. And I'm like, you're insane. Like you don't understand what you're holding or what you're doing. Of course, I'm fairly certain she was insane based on the way that the relationship story.
But real quick here, let me interrupt you real quick. This is a really important psychological concept that most market participants don't understand. I mean, psychologically, I can't remember what it's called exactly, but it's this idea that your base for whatever you're trading or investing in is the price you come in at. So when you're out there saying, when you come in, if you just dump it all in 100K at whatever price number, well, you become tied to that number. And it's really a difficult thing. Your emotions are bad enough as it is, but when you have your emotions coming up and you're tied to a specific number, it becomes infinitely worse. So, a great way, especially if you're just getting into it, definitely is like Andrew's saying here, just kind of break it down into multiple buys at different price levels, because it kind of helps take away that psychological link to a base number. And by doing that, you're able to not be as emotional, if price kind of pulls up against you, because the odds are for most people, when you get into a market, price is going to pull back against you most of the time at some point. And it's the ability to withstand that pullback and allow it to run higher that kind of defines whether you're going to be able to stay in the market or not. Most people comes against them, they freak out, they jump out, take a loss because they're scared they're going to hit their stop loss. Right. It's kind of funny, right? So I just wanted to make sure, I kind of push it there because it is a legitimate psychological thing that people have to deal with. It's actually got a name again. I can't remember what it is, but you do become tied to that base price, and everything, the way in which you view that asset from then on is always based on that price.
Yeah. It's a again, you just get, you look at the chart, and a year ago we were at 25, and before then, there were, I've been around long enough to where, when the pullback happened from 21, down to 3, and then from 69, down to, let's call it 14-ish. There were two levels that were just very, very difficult to break through. That first pullback, it was like we're never going above 10K again. Like it would get close, 8,500, 9,000, 9,200, and pull back. Couldn't get above 10. Then it broke through 10. And then we had, the significant move up, and then it pulled back again. Are we ever going to get above 20 again? Can't get above 20. Can't get above 20. It's just locked and loaded in between 15K and whatever. and sentiment was similar to what it is now. Are we going to ever go above the previous high? When are we going to do that? Can we get above 70? Where we're at? Bitcoin conference came and went. We got to 69. Oh, we got to get above 70. And it always happens. It always goes above that level that people are annoyed with, and won't shut up about. But it always does, and it always pushes higher. I just really encourage. We're not a silo here on this show. We aren't. Neither of us are the most important and best minds in the space. We've just been around a long time, seen a lot of stuff, and know probably most of the right decisions to make. But a guy like Thomas Lee, who's on CNBC all the time, and Bloomberg, has just been a great purveyor of buying Bitcoin during the dips, and being a really great mind when it comes to price predictions. Oftentimes I'll mention him, not often, but a few times a year, I'll mention him on my Twitter feed, and half the people will agree and the other half will be like, that guy's always wrong.
Yeah.
But the funny thing is he's never wrong. That's the whole point. He's never wrong on a long enough timeline. That's really the thing, is that he'll make a prediction that says, well, Bitcoin's going to go to 150K. And he may say by the end of the year, but is he wrong if 7 months later it's at 150K? No, he's not wrong. Bitcoin's going to be, you can go back and, I'm sure someone's collected a bunch of his predictions on YouTube somewhere, and you can see some clips and collage of it. But, there's posts out there where Bitcoin's going to be above 10K. Bitcoin's going to be above 20. Bitcoin will be above 35. Well, I think Bitcoin will hit, 50K at this. And he's always right. And it has so much more to do with Bitcoin than it does Tom Lee. Because Bitcoin is a nameless, faceless asset that can't be subpoenaed by the DOJ, can't be fined by the SEC. It's an alpha asset, and when the smartest guys in finance figured that out, like, think about it, if you're Larry Fink, right, and you control so many of the levers and pulleys and assets of scale across all of Wall Street, he could choose to say, well, we're going to go all in on NVIDIA because, man, it's just, it's the leader in AI, and that's the next just rocket ship of movement in the stock market. That's not what he's talking about when he's on these shows. He's talking about Bitcoin. Why? Well, what happened yesterday? Bitcoin got hit with a subpoena and some, we're going to have some interesting meetings with the DOJ. Now, I don't agree with the DOJ's action. It's no different than the Microsoft actions they took years ago, all of that stuff, right? So it is Bitcoin is such a unique opportunity for people to be able to opt in to an alpha asset, to not be boxed out of a position and an opportunity, like we are amongst so many other things, time and time and time again. And it is, it's a once in a generation opportunity, and it continues to be a once in a generation opportunity. I've said it a bunch of times on my feed that I think it's at 80K by the end of the year, and I think it's at 150K somewhere in the middle of to late Q2 of 2025. So if either of those are correct, you're talking about sizable moves to the upside, 40% as it relates to 80K, and 150 to 200% when it comes to the 150K. So the right people, the smartest people are talking about it. You very rarely hear, there's not a whole lot of airtime being given to the Nouriel Roubini's of the world, who want to say that Bitcoin is worth zero. Where are those guys anymore? You can only find those guys on clips and podcasts from 2+ years ago. Why? Because they're not stupid enough to bet and make commitments like that against BlackRock and Larry Fink. I know it's a bit of a broken record for me, but when that guy steps on the gas, the percentages of slowing that down or getting in front and stopping the movement of that asset that he stepped on the gas with is next to nothing. It's just next to nothing. So you can be frustrated at 58 and change. That has more to do with your own individual situation and you just wanting to have more money in your pocket. It has nothing to do with what's actually going on in the markets around you.
Yeah, no, I agree 100%. And for those of you that, haven't been following us for very long or don't know Andrew, Andrew comes from that TradFi world. So when Andrew speaks of this is the way things are in TradFi and, in Wall Street, we've been in this for 10 plus years. In Wall Street, it's 8 months. These are significant points to be taken because it is, like it or not, it is that Wall Street money, that institutional money, that bigger money that's going to continue to propel Bitcoin forward. As Tillman likes to say, up until 2024, up until the ETFs, everything we've witnessed in Bitcoin has been underground, right? It's been like a plant that's growing. It's all the roots. It's all the underground. Once the ETFs were unleashed, we've broken out above ground now. And so it's a whole kind of different way that we're looking at it. Put another way, up until 2024, Bitcoin was still, it was still, I mean, we all believed it could go higher, whatever, but it was still kind of, okay, maybe it will, maybe it won't. Because it was in that phase of growth, that brand new phase of growth. But once you get the big guys in there, once you get these guys that have literally changed a lot of the world, the Larry Finks out there and whatnot, with the way that they've, where they put their money and how they've pushed other products, you've got them coming in here and they're talking about it. And, Andrew says he sounds like a broken record, but I think you need to.
Yeah.
Because a lot of, let's face it, a lot of our audience, most of the audience we have here are retail traders. They don't understand this to the level that you or I do. Mm-hmm. And they don't understand exactly what the significance is or just how significant that is. So, I think you're crazy. I think if you're not in Bitcoin, if you don't have Bitcoins you got sitting in a bag just holding there for a rainy day being, years away, and just allowing everything that's going on here and the growth and everything that's going on to happen before you go and touch it. I mean, I think
we haven't even mentioned the political part of it.
Yeah.
I've come to the conclusion that no matter who wins in November, that it's a positive for Bitcoin.
Yeah.
I'm not going to talk about, there's a reason why this show is called Beards and Bitcoin. It's not called Beards and Crypto.
Yeah.
So if Trump wins, it's a rising tide lifts all boats. No question about it. If Harris wins, you find yourself in a position where there's still going to be significant regulatory pressure on the quote unquote crypto ecosystem. Well, where does all that capital go if it has to, if it's forced from a regulatory standpoint to consolidate? It's going to go into Bitcoin. It's going to go into Bitcoin. A little bit of a dribble into Ethereum, but it's going to go into Bitcoin because Bitcoin has been, effectively knighted as an asset that people are allowed to have. And so there's just there may be a short-term dip if Harris wins, but it's going to be very short-term. They're not going to roll back. They're not going to roll back the spot Bitcoin ETFs and those approvals. That won't happen. That train has left the station. And so the narrative of it being an uncorrelated asset, the narrative of it being a hedge against inflation, the narrative of it being a store of value will be even more heightened in a negative regulatory environment for crypto. So I'm a big believer that we go higher no matter what happens politically. Again, over a 1, 3, and 5 year period. And so, there's no, and people need to really, really, figure out a way in their own minds to differentiate Bitcoin and crypto, because
Yes.
there's very, very different risk profiles with those two issues. Bitcoin, from a risk standpoint, is a borderline, kind of protected asset as it relates to its position in traditional finance. Crypto is not at this point. Ethereum ETFs exist, but they've absolutely sucked in the first 2 months of their existence. Net outflows of more than $500 million at this point. But at the same time, if you have a continued regime of Elizabeth Warren, anti-crypto army, Gary Gensler, all of those things, we're really talking about now is a consolidation into Bitcoin as an asset. Now, long term, what does consolidation of Bitcoin into traditional markets necessarily mean? That's a discussion for another podcast. Tillman has some real thoughts there. And I don't know, most people that are longer term Bitcoin ethos, cypherpunk movement would argue that BlackRock owning more actual Bitcoin than Satoshi's wallet is probably a bad thing. And I would tend to agree with them, but we're a ways away from that. And traditional finance and Wall Street is not in the habit of creating traps for assets to make them go lower where they lose money. That is not what they're in the business of doing. They're in the business of creating product that makes them as much money as possible. So Bitcoin ETFs doing very well over the longer term is what they're in business to do. So BlackRock hasn't created, again, the audience needs to know this. BlackRock invented ETFs. Vanguard didn't invent ETFs. Fidelity didn't invent ETFs. BlackRock invented the ETF structure, exchange traded funds. They effectively moved almost the entirety of Wall Street and asset management away from mutual funds. 70s, 80s, 90s, and most of the early mid 2000s, mutual funds dominated the landscape. So a company like American Funds, Putnam Funds, those types of organizations were the size and scale of ETF firms now. Well, ETFs now dominate. Why? Because they're much more liquid. What do I mean by liquid? They trade intraday, whereas mutual funds did not trade intraday. They had a settlement at the end of the day, and that price settled based on the change in value of the underlying stocks and bonds or whatever that were inside of the mutual fund. So you could not trade shares of the mutual fund, and liquidity was limited with mutual funds. That's not the case with ETFs. They trade second by second. Liquidity is always on. So BlackRock invented that. They invented iShares, right? So the entire industry followed them. Literally the entirety of Wall Street now is ETF focused and is ETF full because, again, the fees are way down from mutual funds. So and liquidity. So when BlackRock creates a Bitcoin ETF and all of its competitors do the same, they're not in the business of capturing that asset for some dystopian reason and hurting it. They're there to make lots of money. So the short-term, mid-term, and long-term opportunity and story remains the same. If you have a problem with 58K, then turn your computer off and go touch grass.
Go make more money to buy more.
And if it bothers you, and if Bitcoin isn't an asset you want to hold, then sell it. There are more than enough people and institutions who are ready to gobble up those sats.
Yeah, and I think it's really important that point you brought up about they're getting in this game. They're making the ETF here for Bitcoin, not for the price to go down lower, right? Because what I hear a lot, again, I teach trading, so I get a lot of questions, which, to the unanointed, they seem like they make sense, right? Well, what if Bitcoin's just collecting all this so they can dump it on the market and crash it to zero? Well, no. The ETF game is not about collecting the Bitcoin. It's about collecting the management fees, right? I mean, that's what they're there to do. And if price goes up, if number go up, well, guess what? People are going to be a bit more excited. They're going to want to get in. You're going to make more money. If price goes down, if price crashes, well, people are going to pull their money. You're going to lose your management fees.
Right.
And I think that's the way, if you're new to markets and new to Bitcoin, stuff like that, I think you have to really understand that, because otherwise, again, you come up with a question, which is, well, what if they dump it? And the reality of it is they're not here to dump it. They're here to make money on the management fees.
That's not how ETFs work. BlackRock isn't buying and selling their own ETF shares. They're not buying and selling Bitcoin on a daily basis. Their customers are the ones that are buying it or selling it. They're just managing the transactions back and forth. We can talk about, Bitcoin flows and ETF flows associated with BlackRock. And it's easy to talk about because BlackRock's a well-known name and it's just easier to talk about. But the truth of the matter is those flows are what customers are doing. That's just customer flows. Like, they have customers that they're servicing with that product. And if a customer chooses to dump 100 million of their 2 billion position in their Bitcoin shares at BlackRock, then BlackRock has to fulfill that.
There's nothing they can do about it.
Yeah, there's nothing they can do about it. That's not Larry Fink and BlackRock making a decision to buy or sell Bitcoin at any point.
Yeah.
But indirectly, bottom line is that when those institutions are talking to their reps at BlackRock, whatever that setup looks like, you can bet that BlackRock is not telling those customers, yeah, it's down, 12% in the last 45 days. You really should sell. Nope, they're not. They are not having that conversation. A show that I like that's on HBO now, it's called Industry. I don't know if you've
I've seen it. I've seen it.
It's a really good look at global financial institutions. The name of the bank that it's focused on is called Pierpoint, which is a fictitious bank.
Right.
But it has a very JP Morgan feel to it. And, a good portion of the action is focused on, a trading desk floor, right? And people that want to understand what's going on with Bitcoin ETFs and how traditional finance kind of works, go watch that show and go watch the action on the trading floor, where they're carrying massive positions and risk is tantamount. And they have different levels that they have to work within. They can build positions, but they're held responsible for how those positions go. But there has to be buyers and sellers on each side of those positions, or else the system doesn't work.
Yeah.
And, when people ask, well, there's BlackRock and the Bitcoin ETFs are buying so much every day, like, why is price staying the same or going down? There are sellers on the other end. That's the bottom line. People are selling Bitcoin. It's not some conspiracy theory. That's it. That is all that there is to say about it, is that there are holders of Bitcoin as an asset that have decided they've been holding it since it was 3,200. They said, you know what, I'm fairly satisfied with 60K. And even if it goes to 100K, my life is where I want it to be. So I'm going to cash out and do something else with my money. That happens, folks.
And there's also the forced sellers, the ones that have no choice, right? Something comes up. Maybe they got bills. Maybe they got, something happening that they have to sell. So there's always, like you said, there's always.
Well, there are forced sellers. And again, at these level of markets, again, it's why it's, I think people should watch that show. Now, to be fair, this is an adult show. You got to be an adult to watch it. There's other things that go on beyond just trading floor activity. But in terms of this conversation and the way trading floors work, there are risk levels that people are allowed to carry. And when those risk levels are hit, you're forced to sell. There are margin levels where you're forced to sell. Those things happen in a dynamic market. We saw that with the blowups of Luna. We saw that the blowups with,
3 Arrows Capital.
Yeah, 3 Arrows Capital, FTX, all of those things. Those things happen. And it's not as if those things are happening, those things don't still exist. There are still funds out there that carry big positions.
Yes.
There are still funds out there that are trading big levels of Bitcoin ETFs that on a daily basis are trading it and are not holding it. The Sequoias of the world. So when you're asking about why is price not moving forward just because you say the narratives are all to the upside, well, on a daily basis, there are the market dynamics exist. There are buyers and sellers. Period. End of story. Right?
Yeah, exactly. I know you said you needed to get out of here early today. You got an appointment to get to. So we're going to go ahead and get out of here, guys. A little bit short show. Hopefully you enjoyed it. Hopefully you found it really informative. Again, that's our goal, guys. At the end of the day, we'd love for you to check us out, Texas West Capital and thearchpublic.com. But, at the end of the day, the goal here is to get you real information, not, kind of, 2 days in the market, armchair economist kind of thoughts on things. Because, and the reason I love doing this show is because, most of my life is spent trading. This show, I get to get out of the trading and get into the other side of it, where we really look at the, really
one last thing. Yeah, one last thing before I go and to pitch what it is that Tillman and I do. And, we've got a little more than 1,000 folks in our ecosystem now at thearchpublic.com, in our firm, Arch Public. Our Atlas strategy and our Tier 1 Concierge Program products did 10.7% last week. Nice. So in 1 week, the 2 algorithms that are principally traded in both of those tiers gave our customers nearly an 11% upside just in 1 week. So, come and check us out, have conversations with us. If you have the capital to get involved, it's worth it on every level. And we have entry level products at $99 a month that people love. And then again, as you level up, the returns level up. So just wanted to mention that last week was a pretty great week.
No, I love to hear it, man. Again, you guys do the algorithmic stuff. I teach people how to, look at markets, how to read them. So we've got something between us. We've got something for everybody out there in the markets, guys. So, again, you can check the links out under the YouTube here. They're all right in there. Follow Andrew there, AP_abacus. Tillman is Texas OL61 on Twitter. I am TX West Capital. That'll do it for this week, guys. Really great to have you all following along as always. Again, if you've got questions, if there's things you want us to talk about when it comes to Bitcoin in general and our outlooks on the ideas of what Bitcoin becomes and stuff like that, always be sure to leave a comment underneath the video here or on on the notification there on X. And that way we know. We'd love to answer your questions and give you all insight that what we have. All right. So,
hey guys, everybody have a great week.
That's it, Andrew. Always great to have you here. We'll look to bring you Tillman back next week and his smiling face. Other than that, everybody just trade safe out there. Remember, the only thing you control is how much you lose. Risk management, utmost importance if you're in the markets. All right. So everybody take care, and man, we'll see you next Wednesday. Thanks, Andrew.